This video is a full analysis of Workhorse. I will also compare it to Tesla and at the end of the video tell you if I'm buying, selling or holding Workhorse stock. It's Marco here and welcome back to All About EVs, analysis and news on EV companies and stocks. Workhorse is an American manufacturer of electric delivery vehicles, and for the moment that includes vans and drones. Not to mention that its share price is just up 700% since January. Tesla has instead grown around 400%. Depending on when you bought, of course. And so let's start with the reasons to like Workhorse, and I promise you that some of these have never been shown on any other YouTube channel. Now the first reason is that they have arkk backing them. Arkk is one of the most famous funds due to their insane growth. And actually, if we look at their ARK Autonomous Technology and Robotic ETF, ticker symbol arkq, 3% of this ETF is Workhorse stock. Now, if we look at Tesla instead, almost every ARK ETF contains at least a 10% of Tesla. Workhorse has also been recently added to the Russell 3000 and the Russell 2000. Now, as you can imagine, even Tesla is part of the same ETF. But the real question is, who the heck is Russell? Jokes aside, it's very bullish to see that big funds are buying Workhorse. Now the next reason to like Workhorse is the hype. It kind of reminds me of Nikola, with the difference that Workhorse has already sold something. Even Tesla has got a lot of hype to it after Battery Day and all that shebang. What we can take away from this is that both stocks have got a lot of hype behind them and that they are largely correlated. That means that when one of the two stocks grow, the other one follows along and vice versa, obviously. By the way, if you're into EV companies with a lot of growth potential, you should consider NIO as well. I've made a full analysis on NIO and I'll make sure to link that video at the end of this video. Now, the next reason to like Workhorse is the low competition. I've been digging and I could find only another company making electric delivery vans at the moment. And the company I'm talking about is Via Motors, and they are in partnership with FedEx, Verizon, US Air Force and Duke Energy. And Tesla's most similar product will be the Semi. But there is a big difference between the Semi and Workhorse delivery vans. They don't quite play in the same league. Bottom line, there is very little competition for Workhorse delivery vans as of now. And next up, there are Workhorse's drones, which are linked to their trucks and sets them apart. The competition in this case is Amazon and Walmart, but Workhorse has got the only patent for drones taking off from trucks. And since the Federal Aviation Administration has limited the distance drones can fly, those that can take off from a truck have a leg up. And that's what the Workhorse MD says. Another reason to feel positive about Workhorse is that they seem to have a plan to increase their revenues. As we speak, they should be ramping up their production and achieve 5 vans a day in the fourth quarter, and that will be for United Parcel Service, basically UPS, which has an order for about 1,000 vehicles. And on top of that, there is the super debated $6 billion USPS contract that should be confirmed anytime now. And please subscribe because I will be covering the news in one of my videos as soon as it comes out. But a word of caution, I would be careful to trade this news because, as you remember, Tesla was expected to join the S&P 500. That didn't happen and the stock dropped 30%. And before we move on to the reasons to not like Workhorse and that you should be mindful when investing in it, This channel is about analysis and the latest news on EV stocks. And just to name a few, Tesla, NIO and Workhorse. And every Saturday I post an update on my investment portfolio so that I'm fully transparent on all my positions. Subscribe to this channel if you like the sound of that. Now, the first reason to not like Workhorse is their balance sheet. This is the classic growth company with a growing gross loss. Nothing unusual here. The company is experiencing increased costs in the attempt of producing as fast as possible. There is a decent amount of cash for the amount of debt they have, so they could potentially look for more debt if push comes to shove. Also, most of this debt is convertible notes, meaning the shareholders could ask to turn these notes into shares and not quite cause any damage to the business as such. Tesla of the old days was exactly the same and burning through loads of cash. And it's only recently that Tesla has reported 4 profitable quarters, and I can't wait to read the next earnings report. Now, the next reason to be mindful when buying Workhorse is their current valuation. Let's be honest here, it is quite hard to quantify the value of a company with such little revenues. Price to earnings cannot be used, price to sales cannot be used. It is just very hard. That does not necessarily mean that this stock is overpriced. Think about those who bought Tesla when it was valued $25 pre-split in 2011. Back then Tesla was nothing, and now those people are up 7,000%. By the way, if you want to chat about stocks, join my Discord community. I'm very active there. And also all my subscribers are there, so the link is the first one in the description below. So what's the bottom line? Am I buying, am I selling, or am I holding Workhorse stock? I am honestly looking for an entry point to start a position. This week ahead is going to be very important in these terms. And looking at what analysts say, it's a clear buy. So I will be buying it sooner rather than later. And if you want to know when I buy and sell my stocks, again, I post all my trades in my Discord community, and it's the first link in the description below. Subscribe if you like this video, and also if you're looking for an undervalued EV stock, look at NIO. The video on the screen right now is about all the reasons to be bullish or bearish on NIO stock. Pick a great growth stock. Click on the video.